Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within the recent range. And at this point, heading into the open, the market continues to be in a very balanced two-sided state, but within the context of a overall bullish environment. So as long as we can hold above initial support 98.75 to 2075, and ideally you want to see the market holding a little bit above that, then there is still potential for a upside break. Now, today is Columbus Day in the US, and it's a bank holiday, but the markets are still open. The overnight session has been on very light volume and very two-sided. So if the volume remains very light, we can, at least for the early morning, continue balancing within a range. But if you look back at Columbus Day from the last couple of years, if you look at 2014 and 2013, you'll see that even though it's a bank holiday, we can get some pretty decent moves on Columbus Day. And right now the market is in a very balanced state, but if we can break that balance, so if we can break out above 2012 to 2014 or break down below 98.75 to 2075, there would still be that potential for at least a short-term directional move into the next zone. And given that the overall bias continues to be bullish, by default, we are going to give more edge to the buy side and favor a breakout and a test of the 16-quarter gap and 19-quarter to 21-quarter initial resistance, as long as, once the market opens, the underlying environment still supports that idea. And what I mean by that is that if the market opens and we are seeing a lot of weakness in the broader market, the advanced decline is quite negative, then of course that's going to make the upside scenario a lower odds trade. But if the market opens and the AD line is fairly neutral and ideally more bullish, then by default we are going to give more edge to the buy side and expect continuation. And a move into the 19-quarter to 21-quarter initial resistance zone. Now, the markets are running on light volume, and if that theme continues in RTH, then it's going to be a good idea to definitely exit the long trade at 19-quarter to 21-quarter. That is an area of resistance. That is an area where responsive sellers can be active. In the event of a stronger move or a pickup in volume, the next level would be 26.75 and 28.75 to 30-quarter, and again, sell side can be active there. On the downside, we would need to see a break below 98.75 to 2075. The overnight low is 0175. So if we get a high momentum break below that zone, then it would bring the 88.5 to 91 area into play, which on the larger time frame marks that breakout area. So the buy side can still be active and defend 88.5 to 91. We have minor support at 94.5 to 95.5 in between, and that zone would really come into play and be an area that we would trade if the market broke down without really any momentum behind the move. So given that the overall bias is bullish, if the market breaks down but the underlying environment is not supporting the idea of a breakdown. So let's say if we break below 98.75, but the internals are fairly neutral, not really all that negative, and we're not really getting any strong negative tick readings, then it can be a failed breakdown attempt, and the market can go right back into balance. So if the market breaks down, then we have to see whether the underlying environment really supports the idea of a short-term balance breakdown, because the larger time frame bias is bullish right now, so we have to be careful on breakdowns. And that's exactly why, by default, we're favoring the buy side and the upside break rather than looking for a downside break. So we have to see more signs to support a short setup, and really not that much to consider a long setup, because that larger time frame bias is in the favor of buyers right now. But heading into the open, it's a very neutral state. It's a two-sided state, very balanced, stuck in a narrow range. We're not going to stay in this range for too long. Most likely we will get a move one way or the other today. But if it doesn't materialize today, if the volume happens to be very light throughout the day, then we can continue balancing within a range. So that's really the main idea heading into the open. The focus is going to be on the long side. We are going to be cautious on short setups. It does not mean that we can't take short setups. We just need to see more evidence supporting the short side, and there needs to be a pretty good reason in real time to consider shorts. But on the long side, just getting good enough trade location is going to be enough and sufficient to give us some edge. So that is the environment we're in. That's the main idea heading into the open. Let's see if the buy side can maintain this control, if the breakout that we saw last week can really sustain, and if we can get a move into the 19 quarter to 21 quarter. That is going to be the primary upside objective on the day time frame today. So those are our main thoughts. Let's see if the buy side can maintain control, and we'll take it from there.